Thank you for the presentation, Lon, and in agreement with the stacked cylinder bar that you showcased at the start of the presentation, there are three main avenues in which shareholder value can be generated. We will now examine each avenue in turn to better get a grasp on the investment case for Silvercorp. The first avenue being growth of the Chinese mining operations. To frame this segment, it should be understood that the Ying district is the asset, the mining operation of importance to the investment consideration. We can see here that the revenue generated in the Ying district ranges from $200 to $250 million, and this is at silver price assumption of $22 per ounce and a lead price assumption of $0.9 per pound of lead. And we can see here that these are the two most significant metals of importance. You see that we have silver 64% revenue, 28% is from lead. The GC, on the other hand, is only responsible for approximately $30-35 million in revenue contribution, which is why the focus for this segment will be to understand the potential upside of throughput expansion at the Ying district. Now, the Ying district mill expansion is very significant to the Silvercorp investment consideration. It will allow them to double the potential production capacity of the district from 2,500 tons per day to 5,000 tons per day. The main thing that we need to understand is how much of this increased capacity realistically can be utilized, as we can gauge it today. If Silvercorp, for example, are able to complete the Ying mill expansion by the end of 2024 and increase the throughput at the mill from 2,500 tons per day to, say, 3,500 tons per day, according to our financial model, the operating cash flows from the mine will increase by approximately 60%. So the first thing, just about the expansion itself, how much CAPEX remains as of now to complete the mill and the TSF, and more importantly for the mill, when do you actually expect to receive the permit and be able to proceed with the construction?
Yeah, from a CAPEX standpoint, nothing's really changed in terms of our estimates. So it was 30 and 38 million for the two components, so we'll call it 68 million US. Really not a lot has been spent. Most of that's been focused on the tailing storage facility. I think as of the end of the last quarter, I think we've spent 4 million. But in our projections for the upcoming year, the spend is going to pick up, mainly focused on the tailing storage facility here initially. And from a permitting standpoint on the mill, we're not anticipating any issues. It's just been the focus has been from a management time and effort standpoint is on the tailing storage facility. So we think we can get the other permits for the mill later this year.
The issue of the individual mines at Ying have their own throughput permits, which currently would restrict you to actually produce more ore or feed more ore to the new mill. So do you expect this to be a constraint, to actually be able to feed the mill, or will you get them before it's time to, increase throughput? What do you think, Lon?
Well, the rationale for going ahead with the new mill is really based on a few different things. One, as we've talked about, we will decommission mill number one as a result of having the new mill built. And mill number one is the oldest mill, least efficient, also provides the least amount of flexibility. And some of the things that we're seeing in the mineralization, and particularly in these new gold and gold copper zones, the idea is in mill number 3 to have the ability to potentially produce gold concentrates, copper concentrates. So that's one of the reasons for moving ahead with the new mill. We think that we can tweak and sort of tune up the throughput from our 4 existing mining licenses, but that is going to require some additional permitting and permitting amendments, related to getting that throughput limit increased. But we're working on that, and that's one of the projects for this year. And then the other element for increasing the capacity is we do see the opportunity for consolidation in the district. And so Kuanping is but one example. There's a number of other targets, one of which we basically had the rights to as part of an auction, but then due to some sort of bureaucracy in the way that was handled, we stepped back. It could come back for auction again. We might be a winning bidder for that again, as well as some other assets. And so putting this new mill in place is really to accommodate the potential for growth from a number of different fronts, as well as replacing that capacity that is in mill number 1.
When it comes to actually being, done and dusted with the mill construction, when do you expect that to kind of take place, roughly?
Yeah, we based on the change in the schedule, anticipate both the first phase of the tailings facility and the mill would be done by the end of calendar 2024.
You're able to sort of feed 2,500 tons per day now. What do you guys think you can increase? How much more capacity can you get from the existing mines?
Yeah, it's hard to come up with concrete numbers at this point for that, based on the fact that there's some additional permits that are going to be required to increase that throughput capacity. And it's important to note, like, our production capacity is tied to the 4 mining permits that we have, and on some of those permits, we have multiple mines. So what we really need to do to go back to expand that production capacity is, one, identify additional resources in areas, and come up with a mine plan and a mine safety plan that allows you to increase that. So as an example, you can't take a mine that's running at a nice steady state and say, well, okay, look, we've got some additional resources. Let's increase the mine production rate by 50%. That's not necessarily going to be a good idea. You're going to have people bumping into each other. You're going to be sacrificing, some of the safety and other elements that are important. So we need to tie all this in to basically say that there's going to be a new mining operation. We can develop it here, out of the way. It's not going to interfere. And then if we can demonstrate that we can increase the production, we're optimistic we'll get those permits. I'd like to note that up until a few years ago, we had 6 mining units that were running, and the DCG mine is actually on a mining permit that didn't have any mines on it. So DCG is sort of a virgin new mine that was developed in recent years on one of these mining permits. And if you look at the size and also the extent to which we know there's mineralization, we think there's additional mining units that we can develop, but it's going to, as I said, take some time through that multi-step process, demonstrating the resource, demonstrating we can put that mine plan in place.
Yeah, so you also have this permit, which you touched on, for the deeper segment of the existing mines that you're not currently allowed to extract ore from at all. So when do you expect to receive this permit? Do you think there will be any issues?
No, and again, it's a process, and that paperwork for those mines where that's a factor is going to be worked on over the course of this year.
Yeah, it will not be a problem. The mill will be done by end of 2024. It will be done before then, you expect?
Correct.
All right, so the second aspect of being able to feed the mill for the Ying district is Kuanping, of course, and that's an example of you growing inorganically, acquiring a new property. So it's about 30 kilometers north of the mill, the planned mill, and can you give everyone a sense of what the existing infrastructure is there? What kind of do you need to do to get this property into production?
Again, what was done to get the mining permit was to identify an initial resource, area that could be developed, and we've got that mining permit. The notional throughput is, and at this point, is targeting a 200,000 ton per year type contribution. So not insignificant. Can't say at this time, whether that's going to be the initial production rate once we get going. But to be able to go ahead with that mining permit, break ground, and start to basically dig a hole to go underground, we've got to finish up that environmental assessment as well as a mine safety plan. So it's showing the government that we can do this in this fashion without having undue impacts. And then at that point, from an infrastructure standpoint, there's road access kind of right up until the edge of the property, so we don't have to really worry about roads except from the edge of the property to where we'd be mining, setting up a laydown area for mining equipment. So pretty nominal in the way of CAPEX. So I think everything really comes back to the ultimate mining permit, and then also building while we're doing these other projects. Which you've touched on, building a mining team that is going to be focused on the Kuanping operation.
Do you think that you can reach some sort of production from Kuanping before the mill is commissioned, or approximately when it is commissioned?
I would think so. Yeah, I'm optimistic that we'll start to see ore from Kuanping within a year. So that would be ahead of the mill expansion.
And you think that you will store that in a stockpile, since you cannot process the ore? I assume you're close to nameplate capacity currently with your mills.
Yeah, no. I think we'll have the ability to get that ore milled through some tweaks and sort of augmenting some of the practices at the mill. But again, the idea and the reason for building the mill going forward is to have a new, efficient milling facility that has the capacity, to expand and take on a number of the different growth opportunities that we have. And if we, if you use the expression, if we overbuild the mill initially, it's because it just doesn't make any sense to go through the permitting and construction on what is a very economic capital cost of a mill, to undersize the mill, finish it, have these other targets and these other growth opportunities materialize, and then look back and say, oh, it's too bad we didn't build it bigger, because now do we really go through the difficulty of expanding it again? That's just nonsensical. It's better to build something new and have some excess capacity for growth, even if we don't have all of that tonnage spoken for right now.
I mean, to reach sort of a 4,000 tons per day or somewhere up above that, you would need to get more operations into the sphere of influence of Ying. So can you just shed some light? You mentioned that in your presentation, but can you give some sense of how much available potential there are around in the district?
Oh no, there's a number of other projects, and we've seen them, we visited them. We know of a number of other projects that are in a reasonable radius to Ying, and it just comes down to the question of negotiating if it's a private sale or if it's a government auction. Just waiting for them to get all the paperwork together and to put it onto the auction block. And of course, if you look at what's happened in the country, there's been, I'd say, business as usual has gone on pretty well over the last few years, but a lot of new things haven't happened just because of some of the restrictions in the country. So I would expect some of these processes that may have been blocked or stalled do pick up here going forward.
Do these operations usually have their own small-scale mills, or do they ship to somewhere else? How does that look like in the district currently?
It's a mix. There are some older operations in the vicinity, like Ying is a mining district, and there's other people operating there. I'd say other groups are maybe not operating as sort of well and consistently as we are, with respect to regulations. So, there could be some additional consolidation opportunities there. But then a number of these other targets that we've identified are known deposits, but that haven't actually been developed yet. So there's no mine and no mill. So they would be a brand new deposit to bring into operation as a mine. And what we have as a great advantage is our existing team and milling facility. Down the road, there could be additional milling facilities built at each of these operations. But again, the economics will determine that.
And something that we do see quite a lot is like toll milling agreements to utilize this excess capacity that you guys have. Is that something that you're considering or have discussed?
I mean, I won't rule that out, but certainly our preference would be to acquire and operate these facilities, these mines ourselves.
Let's move on to GC briefly. It's a smaller mine, but nevertheless, according to our analysis, it's very profitable. It has a great track record of producing, spinning off cash flows each quarter, each year. So and also it has a long mine life, more than 20 years of reserves. So what we're thinking is, are you guys considering increasing the throughput here, or what's the plan for GC? Because there seems to be potential to improve the economics further.
Yeah, I think the thing that we're looking at in GC, and again, it ties back to a bit of a similar methodology at Ying. GC's obviously got a mining permit with a throughput limitation on it, and so the question is how easily can we get either an amendment or a new permit to expand that production rate? What we're instead looking at is, can we get more metal per ton of ore that we're mining by adding that ore sorting technology. So you see that we've announced the ore sorter that has been in the process of putting in a GC. So what that means is at the mine site, you might mine additional tons, and that's within the permit. But then through the ore sorting, you actually limit the number of tons to within the permitted levels in terms of what you're delivering to the mill, but you're delivering, higher metal content per ton of ore that's going to the mill. I'd say that's the near-term opportunity to improve the economics. Down the road, we can see a situation where, with some of the additional drilling and exploration on what's a sizable property, there may be other areas that we could open up as separate mining units, but for the mine as currently we have it, that's really the immediate opportunity.
BYP, you guys are applying for a gold mining permit, and do you kind of have a sense of when you would be able to receive this permit?
Yeah, it's taken a while, and that's fine. We're patient. Not a lot of value being ascribed to this project. It's looking like, based on all the elements that have been worked on, addressed to deal with broader land use issues in the province, getting the environmental submission. We're optimistic that later this year we would get that permit. And I think we would then use that permit as a catalyst, more likely to monetize the operation.
Are you in talks with someone currently already for that?
I know, but we're majority partner. It's a 70-30 relationship at BYP. So I think the issue is let's get the mining permit, let's get it all ready to go, and then we can determine the next steps in terms of how to realize value from that.
And finally, when do you expect to communicate, more to the markets about BYP? So,
well, I think we're in a process here, and we're waiting. So the next thing really to communicate is when there's a catalyst event. And again, to my other comments, there's been things that I think have taken longer over the years, but also have been impacted, just by the fact that some of these processes take some face time to be in the office, to be in front of people, to be, pushing them and challenging them. And with the restrictions that have been in place, for people to leave our Beijing office to go and to work on these projects and then run the risk of not being able to get back into Beijing. I think that was an impediment to getting some of these things done. But now, obviously, the country's opened up, and I think business may move ahead here at a faster pace. Yeah, to clarify, we're a Canadian company that basically has a majority interest in these Chinese entities that operate the mines. Our track record in terms of production history, and I'd say preferred partner status to be able to operate and get our permits renewed on a timely basis, to get new opportunities, to have been designated as a green mine shows that we're doing some things, some things that are right in the eyes of the government. From a local standpoint, the local government is a huge fan of ours, and so as some of these other projects become available, they like to see us, and we're invited to participate in the auction to acquire them, because the view is that we would be a good partner and a good corporate citizen. So I don't really see the issue that many people do, but obviously there's a perception gap there between sort of that expectation or that fear versus the reality. And there's many other Western companies that have their manufacturing bases in China and don't seem to get punished by the equity markets. So,
on your partner at the Ying district, Henan Non-Ferrous Geo and Mineral Resources, can you just shed some light on what they are responsible for in the partnership? Is expertise in operation, or what kind of entity are they in China?
Yeah, they were basically a government agency that was entrusted and that had the rights to these properties, and we entered into a joint venture agreement and contributed the capital to build the mines. And right now, any sort of capital requirements are funded directly by the operations and the entities themselves. And so we, like them, are benefactors for the dividends that get paid out from the retained earnings from those operations. They obviously have a seat and some say, but we're the majority partner there. So, I'd say it's been a very healthy relationship, and they don't necessarily have to put